Yeah, fold them and then we'll come in.
Thank you.
Thank you.
Make sure you write down what time Aaron can call you later tonight. Just kidding. No one's gonna call you.
Okay, want to say thank you for you guys for coming today. We're excited to be here and share a little bit of our knowledge and expertise that we have working at Central Bank. First, I wanted to introduce who we have here presenting. My name is Hannah Packard. I'm here in our downtown Provo office as a loan officer. My coworker Aaron, he works in the same office as me on similar responsibilities. Then we have Matt Carter. He's manager of our DC department, and then we have Tyler and Tyler, and they are in charge of our mortgage department. So we pulled from a couple different areas to kind of help give you guys multiple perspectives on your financial health and some tips and tricks to be able to help you guys. So that, you're not supposed to start it. We're getting the board switched out. Sorry. No, it's all right. He just asked if I had a joke. I don't think I'm that funny of a person, so maybe just me presenting in general. But these are kind of the three areas that we're going to hit today. First is going to be budgeting, talking a little bit about savings tips, debt management tips, and then Aaron and Matt are going to hit fraud prevention, and then the Tylers, they're going to talk to you guys about mortgages. Oh, yes. At the very end, part of wrapping it all together, they'll talk about how when you kind of use all of these things together, you'd be saving up to $45,000 back into your pocket just by the things that we're talking about today. A lot of these things seem very simple and pretty general common sense things, but they do add up in the end to help you out financially. Okay, budgeting. What do you guys initially think about when you hear the word budgeting?
Good.
Good?
Yeah.
Good, bad?
I'm like,
Right? Exactly. I was talking with one of my friends the other day, and she's like, Hannah, I need to start budgeting. Like, I'm dreading it, but I need to start budgeting. And that's what I hear from a lot of people. It's this kind of apprehension of, I don't know quite how to do it. I'm a little bit overwhelmed. It seems a little bit daunting. So I got curious. I looked up the definition of budgeting, and it is to plan an allotment of funds, time, energy, food. Basically, it's a pretty general definition. It doesn't tell you how to do it or what's going to be the best way. It's very general. So this is where I want to put a big asterisk at the bottom and say everybody's situation is different. And what's going to work best for you as far as budgeting is going to be different than the person sitting next to you. What works best for me is not going to be the same as what works best for Tyler, because our brains work differently and what we have to take care of in our lives is different as well. So as we go through this, write down a couple things that you identify with that really resonate with you, saying, oh, I can do better at this, or I need to start trying this. Some things that you can use to push yourself to make budgeting more of a tool instead of something that you dread. So I'm going to go through a couple different budgeting philosophies. These are pretty general overviews, but hopefully you find one that fits you best. This first one is the 50-30-20 method. I like to think of this one kind of like the Maslow's hierarchy of needs, right? So they start saying the biggest portion of your income, 50% of it should go towards your absolute needs, a place to live, food to eat, and transportation, right? So those are kind of the main categories there. Then the next step up is that 30%, we tailor it down a little bit, and those go towards your wants, right? Going on a trip, let's eat out, let's go to a music park, whatever you think is fun, shopping, that kind of stuff. And then the last 20% is say, hey, let's set you up for your future financial success. Let's save, let's pay off debt. Second one, this, I don't know why. I think of this as kind of the old school budgeting method, right? When you're a kid, you had your cash in your envelope. You said, hey, for me, I'm saving this for a new kid, right? That was me when I was a kid. But this is kind of, hey, I'm going to put a certain amount of funds in each category, and once it's gone, it's gone. I'm done for the month. This is a really good way for people that are visual. A lot of people say that you should spend cash because then you can actually see it going. That's kind of the thought behind this kind of budgeting method. The next one, this is a zero-based budget. This is the one that I personally use that makes the most sense to me. The thought behind it is that you have your income at the beginning of the month and your expenses, you find a way to categorize all of your expenses to get to a net zero number at the end of the month. So you see, from here, let's say you bring in $4,000 a month, and then you categorize out every single thing that you're going to be spending money on throughout the month to make sure that everything is, that you take into account for every single dollar. And that includes, fun spending money, savings. For me, it's actually the order that it goes in is exactly what I do. Get income, I make sure I have charitable giving, then straight to savings. I know that I don't have those things taken care of, and then I budget out the rest of where that money is going towards the rest of the month. This last one, the 60% solution budget, this is very similar to that 50-30-20 budget, except for they put a higher emphasis on saving, and they categorize it out a little bit more. So they're saying that you get 60% towards your needs, and then you're going to have 30% towards savings, and then they break it up in between short-term savings, long-term savings, and retirement savings. And then instead of 20% for that fund money, you have 10%. So it's just a little bit of shift in mentality and focus between those two. So I know we went through those pretty quick. Honestly, if you go onto Google and you search any one of those methods, the ones that you think is going to work the best for you, there are tons of articles, tips and tricks, all that kind of stuff to help you detail out. Because in there they give pretty general categories, but like my categories might be different than your categories of what you want to plan for throughout the month. But once you've got your budget in place and the kind of strategy that you want to use, these are the next things that you should be thinking about. That how are you going to categorize those savings? How am I going to manage my debt? And kind of start thinking a little bit more about breaking down that discretionary spending. I'm going to go into a couple different things on savings really quick, and then we'll hit those debt payoff strategies. So there's a local company here in Provo. They're called Saveology. I don't know if you guys have heard of them. They're a company that they try to help people with their financial planning. Great company. And they did a study in 2020, and they basically did a survey of households across the country, basically seeing where they're at financially, how prepared are they. And they asked people about emergency savings. Now, the general rule of thumb is they say that you should have 3 to 6 months worth of living expenses in your emergency savings. Now, I'm not going to ask for a raise of hand, but I want you to think, how much do you guys have in your emergency savings right now? Could you meet that requirement? We saw this past year with that pandemic and how everything got shut down, how important having emergency savings is to be able to weather unforeseen circumstances. So it's fitting that they did this survey in 2020, and they found that the average household is only saving about 2.3 months worth in emergency savings that they have. And only 65% of households in general have any kind of emergency savings. So while that number is a little bit higher than I anticipated it to be, it's still not even close. You're getting almost 2/3 of people have one, and 1/3 of people don't have any emergency savings. But you'll see it's kind of broken down by age category here. You'll see the older you get, the more wise you get, I guess. And they start saving a little bit more in that emergency savings. But this is going to be your first bucket of savings that you want to be dumping into every month as part of the budget. Once you feel like you have this under control, you're going to want to move and start thinking about retirement savings. This one I'm going to defer to other financial professionals to help you kind of find what the best plan is to work for you. You have multiple tools. You have IRAs, you have 401ks, and there are other tools that you can use to start saving for your retirement. And this is super important to be talking with professionals and have them help you set that up correctly. And also talk to your employer. A lot of these things, like 401k, is offered to employers. They can have a lot of information for you on those things. So once you have those two in place, this other savings category, this is the fun part. For me, this is the part that gives motivation to my budget. This is why I want to be budgeting, so I can be saving for the things that I want. So down payments for large purchases, if you're looking to buy a house or that side-by-side that you've always wanted. And for me, it'd be a lot of travel. I want to make sure that I have fun so I can go play when I want to. And then the last is to meet your educational goals. Making sure that you're setting aside those funds to be able to get to where you want as far as education goes. Okay, so budget, we've hit savings. Now on to debt management. This is a point where a lot of people also get overwhelmed, feel like they don't know where to start. And really, the best place to start is knowing where you're already at. So if you haven't and you don't know everything that you have going on, sit down and make a list. What debts do you have? What are the balances? What are your monthly minimum payments? Make sure that you understand your situation that you're in, and make sure that fits within your budget right now, and that you can tailor your budget around meeting these obligations that you have. This part, once you set it up, and where do I start in reducing my debts? It seems a little bit self-explanatory, but the first step, honestly, is stop accumulating debt. For a lot of people, it's really easy when it comes to credit card debt to continue to grow those balances, look to consolidate, and then look to continue to grow those balances. I don't want to call it a trap, but it's a trap that a lot of people get into. So if you're looking to get out of debt, the first thing to do is stop getting it. And that's a huge part of applying the budget. We already talked about knowing where your payments fit into your budget, and then to start chunking away at these, implement a payoff strategy. These two payoff strategies that we're going to talk about really quick, they both have to do with snow. I don't know why they named it around snow. The only thing I can think of is they're both about gaining momentum and continuing to move forward. So the first one is the avalanche method. This one has to do with interest rate. So after you have your list of all your debts, you're going to list them out from the highest interest rate down to the lowest interest rate. And you're going to pick the one at the very top of the highest interest rate, and you're going to put as much extra money as you have every single month into paying that debt off. So for me, it would be my credit card. That's my highest interest rate debt that I have. I'm going to put as much extra as I can towards paying that off. As soon as it is done, I move down the list to the next highest one. And then just rinse and repeat, paying off debts, highest interest rate down to the lowest interest rate. The second one is the snowball method. Very similar in the methodology, except for instead of looking at highest rate, you're looking at the balance of this debt. And you list them out, lowest balance to the highest balance. And then you do the same thing. Focus on that lowest balance one, pay it all the way to zero, put as much extra money as you can towards it every single month, and then you just move down the list. And like I said, both of these methods, you will find that as you implement it, you feel like that each dollar that you have that you're putting towards it is helping you gain momentum. You're help building your own net worth by paying and not putting as much towards interest. And by paying off that car loan, paying off those credit cards to be building your net worth. Last thing I want to hit really quick is discretionary spending. This is the fun money category. This is one of the best categories. Like I talked about earlier with the other savings, this is the motivational part of having a budget. I heard somebody say the other day about subscriptions. He said, think about all the subscriptions that you're paying for every single month. You're living in more and more of a subscription-based world. This is my challenge that I'm going to leave you guys. Go through and list out all the subscriptions that you're paying for every single month. They have apps that keep track of it for you and help you limit it down to give you a little bit more flexibility in things that you actually want to be spending your money on every single month. So with that, are there any questions? I know we kind of flew through a lot of information and not that much time, but what questions do you guys have? We good? Okay, then I'm going to turn it over to Aaron and Matt.
Great. Thank you, Hannah. So you spend so much time and effort. I mean, budgeting is work. It takes effort, takes focus. And the last thing you want to have happen with you've made this budget, you've worked so hard to save money, is to have somebody come in and scam you, and you watch that money leave, and it's gone. And the reality is there are a lot of scams out there. And we thought it would be important, as we're talking about financial health today, to explain and help you become aware of the scams that are available, that are out there, and so that you can avoid and try to protect yourself from these types of scams. So here is a quick list of the top scams that bit consumers in 2020. Notice how many scams there are here, and is there a specific scam that seems to get is there a specific scam that's better than the other? What's surprising to me is all of these scams are all successful in their own realm. And that's what makes these financial scams work so well, is they try to get your mind to think, scammers try to get your mind to think along the lines of, focus on, I'm not going to get, caught up on a phone call scam. And so you're really vigilant to making sure that you're not going to get caught in that. But then they might send you an email with a link that will, a phishing link that you will click on, and you start going down a road of putting in your information and manufacturing. And so it's really eye-opening to me of just how the variety of scams that's out there is, it plays into what they're trying to accomplish here. And so what this slide shows too is that so that this tech support scams, 22% of those are of tech users are scammed. The home improvement scam, there's by a show of hands, how many of you have personally been affected or know somebody who has been personally affected by a scam?
Or they've tried to scam.
Or they've tried to scam.
We got one of those IRS phone calls, right?
Yeah.
They'll throw you in jail if you don't.
Right.
Yeah, exactly. Yep. And they can be very convincing. And that's what's so uneasy about all this. One of the best ways to combat this is knowledge and being able to make you aware of what is out there. Next slide. The fraudsters out there, they love to prey on weak controls, and they try to get you to deviate your mind to other areas, or on the online. They try to catch you on things that you just aren't thinking along those lines, and they'll nab you. It's really fascinating. And Matt has a personal, well, not a personal experience, but
Yeah, it's not personal.
it's not personal, but it's
This last year, so being in the Visa credit card department, it's amazing to hear some of the stories that we hear from customers. And so just be careful. When you're giving your credit card information out online or in the phone or giving it to somebody in the store, I mean, think about it. That's like a key to your house, right? You're giving somebody the ability to come and go in your house whenever they want. So with a credit card, they can hit your card or debit card. I say credit card, debit card, Visa, whatever, right? Whenever they want. Once you've given them that, so you want to make sure you're doing business with somebody that you know and trust. Unfortunately, some of the back to the prior slide, don't go back there, but it's the tech support scam. There are legit companies out there, right, that are providing a great service, and they're out there trying to give you the technology and things to help keep you from getting scammed. But by scams, fraudsters know that that's a great way to get you. So we had a customer who, I'll be careful how I say this. They're a little bit more mature in their life, and they went and just Googled. They wanted to get some malware technology, and it was for a small business. And so they went out and they bought, it was $8,000 for this technology. Now, number one, that's probably a red flag right there. That's a lot. That's a lot of money there's a lot of free things out there, right? But regardless, they gave them their information, and they actually came in and supposedly installed software. Well, by doing that, they had complete access and control to their system. And they moved money around. They got in there, hacked into their accounts, and they moved money around. And then they actually said, hey, we accidentally gave you too much money. Will you please wire us back this? And so they were so sophisticated and had this person they bit. And they ended up wiring 2 separate wires back to this company because they gave them too much extra money as a refund. Actually ended up losing $100,000.
Oh gosh.
$100,000. And this is just one story of many that we see at the bank. So I guess just be careful when you're doing business with people you do not know, especially online, right? Because you don't know who's on the other end of that. It looked like a legitimate person on their end. They went and selected, Googled it. I don't know exactly how they did what they did, but it was pretty sad. And this is someone that's probably getting close to, now their kids are running the business too, but this is someone that's getting close to retirement. And back to our point, you built up a lifetime of building up assets only to lose it like that. It's very scary. So you just want to be vigilant and be careful.
Thank you, Matt. Yeah, it shows it can happen to any one of us, and even those that are very sophisticated in the tech world, they are still getting scammed by this. And so, just be vigilant. Be careful on what you're clicking on. Be careful with emails. I mean, we've had emails come through. I've had an email come to me on my personal email that made it look like it was another email from my wife. And asking for hey, I need help. And my first was like, my wife doesn't communicate to me this way, and so that's what you mean. So just being aware of what you normally do, and then just stop and don't. Just be careful.
One more quick story.
Yeah.
My grandma. Sorry, he's talking to everybody. She calls up and says, hey, can you stop by my house? So they're in their 90s, right? So I stop by, and she is pretty upset. And I said, what's going on? And she shows me that she got like this 8 pages, and it looked legit. She was the Publishers Clearinghouse winner. She won it finally after 20 years of doing it and trying to win. And so she called the number that they had said to call. And that person said, great, you need to pay taxes on that first. You guys have heard these stories, right? So go down to your local Walgreens and buy gift cards. That's one way and then you'll give us the number and then we can get you your award, right? I mean, and what they had provided looked pretty legit. And she went down to Walgreens. That's how much she had thought she was the new millionaire. And luckily, Walgreens did not sell her those cards. They asked why. And so she was pretty upset. Why would they not sell me these gift cards? And I don't know the amount, I forget. But it was a good amount, right? $5,000 or whatever it was. So she was disheartened to hear that. But I'm telling you, these scams are all over and they try and make them look very, very legit. Sorry.
No, yeah.
So just be careful. And the elderly are the ones that are really being attacked. So with your parents or whoever, help them out. Be involved because no one wants to talk about their financial situation. We're all very private about it. And if you did become victim to fraud or ID theft, right, someone steals your identity or something, people are embarrassed by that. They don't want to talk about it. But this is a conversation you should be having with parents, grandparents, or anybody. Tell them to call you and ask for help before they do something like buying $8,000 of software to put on their home computer, right? So,
Okay, great. Thank you, Matt. And you talking about gift cards, we think we have some gift
Oh, yeah.
cards that we want to do.
oh yeah, we want to do our
So
drawing.
we're gonna take just a quick timeout from our presentation, but we want to do,
Yeah, did everyone? I think
is
so.
there anybody else that has not?
They're all looking saying, how can I get another one in there?
Yeah.
Okay,
That's
so
what I
let's,
keep thinking.
yeah, let's take a pause,
Oh,
and let's
wait.
do a drawing.
Those are all blank. That means nobody wants those.
Okay.
Okay. Okay, is Amy Bueller. All right. Amy,
Oh, right in the
come
front
on.
row. Wow. How does that work?
Okay, there's your gift card. So, Amy, what type of gift card is that?
Amazon.
It's an Amazon?
Fake, not fake.
Not fake? So, yeah, is that a real or a fake gift card?
It looks fairly fake.
Okay.
I'm just saying.
We are insulted.
Yeah,
Like,
thank
say
you.
that.
But that brings home a point. So how easy it can be for someone to gather information about you. We just did a quick drawing, had you fill out a form, and we didn't ask for any identifying information, but we could, scammers do all the time. There's, hey, here's $100, click on this link to win this. And it's amazing how many people do that. They put their identifying information. They don't think that there's no harm, no foul. And you just relay all of that information. Yep.
I've noticed on Facebook, there's a lot of times these little things that get sent out to say, what's your best friend's name, participate in this little survey. It looks fun and you share it with all your friends.
Yes.
But hidden a lot of times I've noticed in those questions is some pertinent personal information, and I thought, don't fill out those things. I think somebody's trying to gather
Well, scary.
scary kind of or personal information that may seem really innocent, but it's being collected somewhere.
Yep. And it's being collected and then sold.
Collected, stored, and a lot of fraudsters, once they get your information, they won't go and do something right away with it. They'll wait for years because now your guard's down, right? So you think I may have lost my card or whatever it is, right? I may have been a victim and then nothing happened.
Yes.
We'll do someone later with this.
Well,
Yeah, we'll do another drawing for the other fake one. So be careful because, again, be diligent. And if you need to put a freeze on your credit or whatever it is, because it can happen years later because they want to wait till you're not watching anymore, right? Did you?
Question, I just recently, I have a daughter that's special needs, so I'm paying on her account. And I was looking at her account and I have her debit card. I'm the only one that ever uses it. And I was just thought I need to go check her account, see how much is in there. And there was $84 at Sammy Fish in Bronx, New York. How do they do that?
Well, I don't know the vendor, right? You're saying that was fraud
It
then?
was Central Bank debit card.
Was this recently?
Oh, yeah, it was, well, I was in Florida, I checked her account, so it was in March. So we had.
Okay, so you already dealt with that. You did call and.
Yeah,
Okay.
and I got, covered it, but
Right.
how do they get your information?
It's a great question because,
You don't know either.
I mean, how would anyone figure that out, right? It could have been one vendor along the way who was compromised. So a lot of merchants are supposed to put on their, the merchant machines that they're processing cards on. There's supposed to be software that they're checking all the time, right? Because you've heard of Target, these data breaches where they have actually gone in and hacked those machines
Mhm.
that store all this credit card information so they can get thousands and thousands of people's information, right? And again, sometimes they'll hack it and they won't say anything, they won't do anything for a while. They'll take that info, sell it on the black market, black web, and then yeah. So you don't know who along the chain may have been compromised, right?
Right, my credit card, I caught it fortunately really quick, partly because they caught it in Texas, and it was used in California for not too big of a purchase at a gas station, in Houston, Texas for a seafood restaurant, in back east somewhere for a vending machine, and then Walmart, I think it was, in Texas as well, caught it and said no. And I'm like,
It's crazy.
it is crazy.
They can just produce fake cards and
Check
use
your
them. They'll use them
accounts
until
on a
they.
regular basis.
Thank you.
That's
We'll get to
exactly-
that. Things that
yes.
you can do.
In fact, I think that's a great leeway. It's
Yeah.
of what you can do to protect yourself. Yeah, because it's prevalent. Everyone is being affected by this, and so let's just go through. So review that. We you just talked about reviewing the account. That is a great way to protect yourself. Check your accounts often. I mean, I'd say no more than or no less than weekly. Check your account, because the faster you can identify it, the faster that that fraud can be caught. We can shut off cards. We can take the necessary steps to stop the bleeding of funds.
And understand processors are constantly, they've got systems that they're monitoring. When that stuff starts happening in different states, they'll catch it pretty quick, right? And shut it down until you unblock it. So
Yeah, my personal card, they actually contacted me.
Right.
Via phone and via email.
But they're smart because that's being done, and fraudsters will try and use your card in a way to push that system catching it as far as they can until it gets shut off, right? So they'll do little purchases, they'll start stepping it up until they know it's going to get caught and shut off eventually, right? So is there a comment in the back?
I was just going to mention that's one of the cruxes of having all this great technology because we've automated everything.
Right.
You know, we have all of our statements come. You know, they're not coming in the mail anymore. We just automatically do the bill pay thing.
Right.
So it's like, who even looks at it?
It's convenient not to look at it,
Yeah,
right?
who even checks it?
Yes,
So,
it's a good point.
Yeah.
And it's the number one thing you can do is please check it.
So my question, I've never had anything like this happen to me. If something like that happens where someone gets hold of your card and they're spending things across the country, do the banks usually write that off, or are you responsible for paying that back, or how does that work?
There is fraud protection, yes. So there's a bunch of rules surrounding that, but for the most part, you're protected for fraud. Now, on a debit card issue, the only reason why some people say use a credit card, not a debit card, is your money in your account's gone until we can give that back to you as a credit while we're working that out for you, right? So it could cause other problems. Now my mortgage just bounced because it took 2 days, and that's one. But you have protections, yes, for fraud.
And there is limits to those protections as well. I mean, if you're not checking your accounts and 6 months later
Right.
you realize that hey, I had fraud and I've lost thousands of dollars. That's
Yes, there are constraints like that. So if you're not looking at your accounts, there are, limitations to that.
So it is safer to use credit card versus debit card.
The
'Cause I do
protections are
both.
kind of the same. It's because your debit card's still backed by Visa or MasterCard, right? It's again, you're just temporarily out of your money that's in your account. So you do have protections. You guys are in the branch world, more on debit card. Okay, I'm in the credit card side, so that's my understanding for debit as well. Yes.
Yeah, this has been years ago when you actually had paper statements in the mail.
Yep.
And so I was checking mine the end of the month and somebody had gone to Walmart in Orem and bought a printer and nuts. And I was like, what the heck, because that's $300.
Yeah.
I'm like, okay, that was not me. And then same day, they went to the American Fork and bought drinks for the nuts and another printer. So I called both Walmarts because I couldn't figure out, I'm like, what in the world did I spend? So that's how I found out what was purchased. And so we had to file a police report in both cities. And because the police report, then that proves that we're not the stupid people.
Right.
And so we got reimbursed for our
Yep.
credit union. We closed all the accounts, redid everything.
Yep.
But so since then, I do check my account every day.
Well, you would. Come on.
Protect your
Check
assets.
all of our accounts. every day.
Yeah. Because, it takes you 2 minutes to
Yes.
pop in and just go, yep, I know what that is. And my brother, he has more money than I do and more accounts than I do, but he had a wire transfer fraud thing go through that he was never notified about. His bank just did it because it was a request. And he was like, what the heck? So he's lost a couple $1,000s over that because of circumstance, it's going to take a really long time to prove and get the money
Yeah.
back. So because he wasn't checking, every day.
There
Yeah,
is,
it's a big deal.
it is a big deal.
So-
And again, you saved a lifetime building this stuff. Your
Totally.
nest egg, right?
Yep.
So you've got to be diligent protecting it. Thank you for sharing those.
Yeah, and financial institutions, we're working really hard on our end to help and protect the consumer. And there's a lot of tools like to sign up for email and text alerts on your account. Those are great way to just quickly, you get a quick text and say, hey, there's a charge just went through your account. If you know that you just swipe your card or spend money, you know that text is coming. If it's not something you were expecting, boom, you immediately know, hey, wait, something's weird here. I didn't authorize this.
So most of your credit card companies and banks have this, so make sure you're signed up for it, right? It is really important.
It is nice. I mean, I get a text saying, did you spend this money?
Right.
And then you'll put yes or no, and
And that's the fraud, actually. If you're getting that is a fraud alert
Right.
saying they're going yellow flag. Is this you or not? Please respond to those.
Yeah.
Right.
We have some customers that they don't respond to them, and then fraud keeps happening because no one in the background knows that it's not fraud now, right? Because they just didn't respond to it. And if you don't respond to it, that could become an issue and you're liable for some of that at some point. At some point, if you're not responding to that.
I also had one time, my bank put $8 billion in my account.
Oh, really? Did you go to the ATM as fast as you could?
So I call them like, what's this? I'm like, oops, sorry. I'm like,
We've heard of that. It's
I
never
just
happened
have,
to me.
I'm like, can I just have the interest for the day? Because it was like $20 million. I'm like, what the hell?
A banker is your favorite.
Yeah.
I've never heard somebody being on the positive end of fraud.
Well, I've heard of it, but I've just never met somebody, so
Yeah.
that's great.
That's great. So let's go ahead and show the rest.
There's like 3 or 4 pages of
Yeah, we've
these
got it.
things.
So yeah, there's a lot of things that you can do to protect yourself, and you can never protect yourself too much. Multi-factor authentication. That is a great way to with passwords. More and more fraudsters are getting more and more sophisticated with getting people's passwords. That authentication, they send you a text back to you, and you can put in the code so they know it's you.
People, they're not going to call. They're not going to call you and ask for information, okay? Like they're not going to call you. The IRS will not call you. Please know that.
They mail you.
They will mail you. They will not call you. So just understand, if someone's calling you, you better be very careful. And if I was you, I'd hang up and say, I will call you back, and then call that place back with the number that you have for them. Does that make sense? And we're going to have to hurry because we're going to run out of time for Tyler. Did you have something quick?
No.
Okay.
Yeah, so let's go to the next page. And these are just, again, some more, just different things that you can do to protect yourself because there's just so many ways now that we interact. Our phones are so, it makes things so easy, but it exposes us. And slip-ups happen all the
I
time.
love the second bullet point. So if you ever go type a big bank, Citibank, go type Citibank for a credit card for them, right? You probably have 1 or 2 pages filled with different links. Which one's legit? It's very easy for a fraudster to go in there and slide one in there, right? So bookmark the sites that you know are legit, right? Next one.
This first one, if you ever are using, even if you're using your work computer, make sure that you are. You
Careful what you're putting in.
Yeah, be careful because a lot of times the computers will save like your ID, your login credentials, and so and that's just a normal thing that they is built into the computers, and so especially if you're not using your usual computer,
Be cautious.
be cautious. Be very cautious.
You guys have heard about the email scams. They come from somebody that looks legit. You select on it. They'll even make it look like you're on their site, right? So just be careful selecting on links from people you don't know. That's how they get in there and now can start download spyware on your computer. So be very careful with that.
There's a funny story, because at my job, one of the coworkers got it, and this is that, because I work for Intermotion as well, and somehow it got to like everybody, and then even till now we still make fun of me, like, it does not look like you, like, what is wrong with you?
Right. Well, there's right now, I mean, let's just be, and this happens to everybody. On the weekend, Colonial Pipeline, the largest pipeline for gas going from Texas back east, shut down because of ransomware. They just went in and hacked their system, and they basically had to shut them down.
That's
This is one of the
happened at my-
largest pipelines.
That happened at my husband's work a couple of months ago.
Yeah.
They actually paid the ransom because it was the fastest way they can get things back.
It's scary.
It's terrifying.
So again, just be careful, be diligent. We'll finish this up.
Is that the last one? Okay.
Okay.
So, is there any other additional questions before we turn the time over to Tyler and Tyler? So just be vigilant. The risk is out there, and yeah, just be vigilant. That's the biggest thing that I would just.
And it's okay to call and ask questions.
Yep.
We'd rather have someone call and ask questions about it before they do it and then regret it. So it's okay to ask your friends and family before you do something. Thanks.
Okay.
All right, well done, you guys. Appreciate it. I hope that you're getting a few things just put together in your minds of what maybe you can do to help yourselves, right? That's the whole goal of this presentation, is just to give you a couple of ideas that might be able to protect you a little bit more against fraud, or start building up your savings account, or start crawling out of debt, or in our case, we're going to talk a little bit about mortgages. Maybe start buying a home or thinking about buying a home. And so today Tyler and I, our whole goal here is to help you guys understand kind of what lenders are looking for if you're looking to buy a house. And everything that's been talked about thus far by these great people play a huge role in buying a home, right? And so what we're after is we kind of looked at this and we looked at this as the health checkup, but the mortgage edition of the health checkup, right? And so if you're going into your doctor and saying, hey, how healthy am I? They're going to look at all sorts of different things, different statistics. They're going to take all different kinds of measurements and whatnot and kind of see, hey, here's maybe how healthy you are, and here's what you could do to get a little more healthy, right? And so that's kind of what we do as lenders. We kind of look at your financial picture and we go, okay, from a financial standpoint, here's kind of how healthy you are, and here's what you could do to get a little more healthy. And the healthier you are, the more money you save, right? When it comes to mortgages and typically any kind of credit. And so that's kind of what we're playing off here in this. And the main measurements that we're looking at when it comes to mortgage lending are these things. You're looking at how healthy are you in an asset standpoint, income, credit. Those are the three main things. And as we're going through this, I want to make sure we put up here, there's hope, because I can tell you right now that we talk to a lot of people and we see a lot of people that aren't maybe the marathon runners of the financial world, if that makes sense. They feel like they're not quite where they want to be financially, and that's okay. If you're not right where you want to be financially, there's hope. And Tyler's got a great story that he's gonna share a little bit later about one of these instances where someone kind of thought they didn't have any hope, but there was hope there, and it's a great example. And so we're gonna let Tyler talk a little bit about asset health and what that means.
So welcome everybody. Are we having fun yet? I mean, come on. What's more fun than financial awareness, right? All right, let's be honest. So as Tyler was saying, in the lending world, we all kind of deal with this in a little bit of a different fashion than one from the other. But in the lending world, there's three major C's of credit that we kind of talk about. C's, like the letter C, stands for collateral, capacity, and character, right? Character, capacity, collateral. Okay. And the way I look at it, I have to visualize things and kind of make a picture out of it. And so I kind of look at those three things as three legs of a stool, right? Usually 3 legs of a stool make it so that you can sit a pretty decent amount of weight on that stool and it's not going to crumble. You take away one of those legs and it becomes pretty faltery, and you may win $10,000 on America's Funniest Home Videos if somebody's recording you, right? As you fall over. The first, asset health. That's where we're talking about kind of your collateral, the amount of down payment you may have in a transaction, specifically for mortgages. So as we look at your asset health, how many in here are current homeowners? How many have been homeowners time and again? How many are hoping to be that, right? We're all in different phases, as Hannah said earlier, in different ways to make that a little more advantageous to you or not. If you bought a home before, you know that generally there's a down payment needed, right? There are products out there, there are loan products out there that may require or allow for 0 down payment. In general, a 3% to a 5% down payment is necessary for a conventional mortgage, okay? You've probably heard of mortgage insurance out there, right? Mortgage insurance is a product. There's a false narrative out there that some people come in going, I can't buy a home because I've heard that I have to pay a 20% down payment upfront, right? 20% of $400,000, let's say. I mean, that's a lot of money, right?
Or in today's market, that would buy you a cardboard house-ish.
Well, 400,000 was on the sign of the Tough Shed down at Home Depot this morning. No, that's just the general. I mean, 20% is a lot of money, right? The government and the regulations allow for less than 20%, as little as 3 to 5%. But there is a little bit of a higher risk to them when that's the case, because they're guaranteeing you're putting less money into the game, less skin into the game, if you will. And so mortgage insurance is a factor of that. They come in and it's just a little addition to your monthly payment that takes place. Now, and so that happens anytime you put in less than 20% of a down payment on a mortgage purchase. So one of the first things we look at as a lender is your assets. Where is that down payment coming from, right? And in general, before I go down through all the different assets, in general, the healthiest asset, right, as we're looking at it from a health standpoint, is a seasoned asset. What do I mean by seasoned asset? That you didn't just win the lottery and have a big down payment, boom, put into your account yesterday. Because we need to see 2 months worth of bank statements, right? That generally are going to show that 50,000 or the 20,000 or whatever down payment amount you've got. that it's in that account and has been there for a minimum of a couple of months, right? Now, that's not saying that you can't receive money from elsewhere, okay? One of the things that we see on here, so your typical asset types, checking accounts, savings accounts, 401ks, you can draw upon your 401k, cash it in if needed, grant monies, mutual funds, money market accounts, gifted funds, right? If you have a direct family member that is willing or able to gift you money right there, that is an acceptable form of an asset to come in. Obviously, that's not going, in most cases, that's going to be taking place right then and not as of a couple of months ago. So
if you reply to one of the emails that has a rich uncle in Siberia that's going to give you some money, just kidding, don't reply.
Do it. Yeah, get the 20%. No, I'm just kidding. So in general, that's the asset health. Those are some of the things that we as mortgage lenders look at right off the bat. Is okay. Is there enough of an injection into this purchase, and where's the money coming from? Okay, if you've got the ability to have taken advantage of some of the savings structures that Hannah talked about before and built that little nest egg, we're going to need to see those account statements. We verify those savings accounts. But that's just one of the legs of the stool. Okay, so down payment. The next leg of the stool comes to your income. I'm going to let Tyler talk about that.
Yeah, and so income's the next important piece, right? Of course, what we're after as a lender is we want to make sure that you can repay any loan that you get. And so again, this is playing so heavily into what Hannah talked about earlier. And this is, we want to make sure that you've got enough income to cover the debts, right? And so if you're not aware of what debt you have, or you're not aware of the subscriptions that you're paying for every single month, that could affect whether or not you qualify for a mortgage in the long run. And so really you want to be watching. I would take the advice that Hannah gave you quite seriously and do everything you can, because generally what we need is a debt to income ratio of 45%. We get asked a lot of times, what does that mean? And it's really pretty simple. Okay, you take your total gross income, okay, so before taxes are taken out, anything else, you take your monthly gross income and you times it by 45%. Okay, and by doing that, that tells you your maximum amount of debt that you can have per month. That's amount of credit debt. Including your new mortgage. Your new mortgage, credit cards, RC Willie, however else you're planning. And so we need your debt to income ratio to be 45% or less, and that shows that you are financially stable and that you'll be able to repay a payment. Now, again, there are other products out there on the market that some go higher than this and some go lower than this. And one of the pieces of advice that I always give to people when I'm talking about this is, just because you can go to 45% doesn't mean it's always a good idea, right? And so this used to be 33%. And then it went to 38%, and then to 43, and now 45. So what's happening in our world is debt is being more and more acceptable. And so again, these are the qualifications, but we really, in a meeting like this, in a presentation like this, we can only give so much general advice. The real piece of advice here is that if you're interested in buying a home, or if you're interested in working through Visa or anything else, our strong piece of advice would be get with a professional that can give you more specific guidance to your specific situation. But anyways, as we're looking at income, there's basically two different ideas, and it's predictable income and variable income. Neither one is good or bad. It just means that it's just different. So predictable income is a W-2 job where you're going to go in, and you're going to, hey, I'm going to punch the time card every day, and I'm going to get my wage, and I'm going to go home and go from there. I'm going to get my income going from there. Variable income is more like self-employment and commission income and that stuff that kind of is a little bit wavy, right? And for variable income, we kind of use the past to tell us what's stable. So we'll go through a couple of years and see how that goes. And so we'll just kind of work with you as time goes and as things go. But again, your mortgage professionals will be the ones that kind of go through most of this with you. But income's another huge important piece of that stool. And if we don't get all three pieces of the stool in, then the stool's not going to be quite stable. So I'll let Tyler go through the last stool here, and then we'll finish up.
All right, so the last important leg of that stool is again the credit itself, right? We have to take into consideration what your history has been on borrowing money in the past, either on a credit card or on an auto loan, student loans, personal loans, you name it. Your credit report, I like to tell people, is kind of like rewind back when you're in grade school. It's kind of the report card of how well one can get in and out of debt, right? And that credit report is going to show all of the good or bad, whatever's showing there, right? Again, in general, I really like the picture that's up here because it reminds me that my wife just gave birth to our fourth child back in January of this year. And so that monitor was something that's very vivid in my mind right now of, something that was tracking very vital information of both our child and my wife, right? We watched those numbers. The doctors watched those numbers. And if something started to go out of whack, well, it told us what we needed to do to get that baby here safe and sound, right? And so much like that, as we're looking at your credit report, there are certain things that are going to tell us, okay, do we have something here, or is there a little bit of work that needs to be done to get to that point and get that baby here safe and sound, right? Get that house bought. In general, how many of you are the market? The market talks about FICO scores. Everybody heard of a FICO score, right? FICO score is just one of the many terms used referring to your credit score. What's your credit score, right? And
Just out of curiosity, within the last 6 months, by a show of raise of hands, who knows what their credit score was or has been in the last 6 months? Okay, that's good. That's great. That's important. It's huge.
to know where you stand is huge. Yes, sir.
Why is a FICO score different than a credit score that you get from the 3 credit reporting agencies?
That's an excellent question, and one that we field quite often, isn't it, Tyler? Because I'll have people walk into my office and say, hey, Credit Karma right here on my phone tells me I've got a 740 score. And then I pull their credit 15 minutes later, and sometimes it shows 780, or sometimes it shows 720 or 680. There's a couple of different answers to that, and they're just my personal knowledge on it. Number one is sometimes that Credit Karma or some of those other apps, I won't just pick on them, some of those apps only draw from one of the 3 bureaus, and they're only telling you that score specific to that bureau. They're not reporting to you all across the board of the 3. Number 2 is every credit reporting agency has a little bit of a different module or formula, if they will, on what they weight to get this score versus this score or this score, right? And so naturally scores will vary a little bit between. Now, great question. When we pull a credit report for your mortgage, it is required. Generally you're going to have 3, right? The 3 big credit bureaus are Experian, Equifax, and TransUnion, right? The rule that we have to follow is that we are going to qualify you based on your middle of 3 scores or lower of 2 if you've only got 2 reporting, right? That's the government's way of kind of not giving you ultra good credit for your highest score, but also not dinging you for your lowest score. They look at that middle score, right? So sometimes that can be the guessing game. And I guess a third point in that is depending on when the creditor reports your information to the bureaus and when that credit report is pulled can be the change of your credit score too. If a payment's made on something that brings it current or brings the credit card balance lower. All of those have a factor on your score, and so there can be a timing issue there. Does that answer your question?
Yes.
Okay. So great question. So what important factors, what vital signs are we looking at when we look through a credit report, right? We look, there's some obvious things that are reported there. Any judgments, tax liens, collections, late payments, bankruptcies, foreclosures, all of those things are going to be reported there within a certain amount of time, right? Even if somebody had a collection and it's a paid collection, you've settled the debt and it's going to be paid there, that's good, but it's still going to report there as a paid collection for a time, right? There will be a time that it eventually falls off, but it does stay there for a little while. Other things, credit to limit ratio. I wanted to talk about that for just a second. That goes back to Mac's world, right? Mac gives you a $10,000 credit card and he wants you to use $9,999 of it, right?
Hopefully you're gonna pay it back.
Oh, okay. So there's actually a trick to credit card usage on a credit report, right? In general, let's just say you have a $10,000 limit, right? Why is it said their credit to limit ratio, right? One can get a credit card and one can run that credit card to its max and one can take years to pay it down, right? Because you just make the minimum payment, which isn't a bad thing. You haven't made a late payment, you're paying it on time, but that action itself actually hurts your credit score, right? Like I said in the beginning, credit report is only a report card of how well one can get in and out of debt. And so the way the credit bureaus see that sometimes is one could run in and use that limit, but it took an awful long time to pay it down. And so in general, one of the ways that you can boost a score really pretty quick is keeping any credit card limits at or below about half of what its available limit is. So if you have a $10,000 card, try to keep that balance below $5,000, $4,000, right? Utilize it as much as you want because that will help build credit, but pay it off or pay it down as quick as you can or keep that balance low. Just one of the tricks to the trade.
The sweet spot is between 33 and 50% of the balance, okay, on credit cards. And so if you're going to get that, if you're going to get your credit pulled by a bank or a lender or something, our advice would be get those balances paid down to 33 to 50% of the balances of your credit card. Make sure that gets reported. Now, banks typically only report, or credit cards only report once a month. So if you go pay that today, don't expect your score to update tomorrow probably. That credit card will not report back to the credit agency until sometime during that month, and then you don't want to have your credit pulled until then.
How much time do you have?
5 minutes. Okay, we're going to bring this home here. And so really, we teased at the beginning, Hannah teased out $45,000 worth of free advice here. And so we're going to talk a little bit about this and how this all really plays into it. We have a scenario where someone wants to come in and get a mortgage, okay, $400,000 loan, 30-year term with 5% down. And there's two different borrowers here. The first borrower has a credit score of 675. This is a borrower who isn't a bad borrower by any stretch. This borrower actually, a 675 score is not a terrible score. It's someone that maybe doesn't have elite credit, but someone that maybe has had a couple late payments and a couple things here and there just hit their credit, but nothing dramatic. Okay, borrower number two has a 740 score. Okay, this is considered pretty elite credit. You know, credit scores generally go all the way up to 810 to 830 depending on the bureau. And so 740 is someone that typically makes their payments on a regular basis, doesn't have late payments or collections or anything like that showing up. So that's just a 65-point difference. That is not a wide spread between two different people. But what that does is borrower number one would, and this is just hypothetical, would get an interest rate of roughly 3.875%. And borrower number two would get maybe a 3.25%. Okay, again, not a huge difference. We're only talking 5/8 of a difference. That's not a big gap for only having a couple late payments here or there. Okay, but And what that does to your monthly payment is the borrower number one is going to have an $1,880 payment, while borrower number two is going to have a $1,740 payment. So you can start seeing that widen a little bit, right? That difference. Now we're talking $140 a month. And again, not the end of the world. $140 a month isn't that big of a deal. But let's now talk about interest over 30 years, right? And so borrower number one is going to pay just under $249,000, while borrower number two is going to pay $204,000. Okay, and so you can see where we're getting that $45,000 worth of advice. And I'm just telling you, between borrowers number one and number two is not that big of a difference. It really isn't. And so this is why it's so important to do what Hannah's talking about and to know your debts, know your income, live within your means, save, do the very best you can so that you can do everything you can to be borrower number two, right? You want to be this borrower number two or as close to it as you can. Now, if we can't quite get there, if we're not there quite yet, again, this isn't a bad scenario. This really isn't. But you can see how much better this one is over time. And so do what you can, protect yourselves with fraud. I mean, be vigilant, do everything you can because it matters, and it really does. And so, yeah, and there's always hope. And so if you don't have if you're not exactly where you want to be, if you feel yourself here or maybe even further down, you know, most of you raised your hand when you said you knew what your credit score was. If you're somewhere south of 675, try to get with someone, get with a professional, and start doing the little things that make a difference. And I promise you that slowly you're going to inch your way up to borrower number two and beyond. And that's how you save money. That's how you, in the long run, this is how you attain wealth. Is you take care of yourself, you do everything you can on a financial basis to be borrower number two or better, and you can get there. It's just doing the little things. You'll get there. So, yeah, go ahead.
One of the things that I'll just wrap up with real quick is talking about exactly what Tyler mentioned. Years ago, one of my I'll never forget this borrower or never forget this closing. I had two women come in to my office. They were sisters, and the sister introduced her younger sister, and this younger sister was just in turmoil, visibly shaken and pretty emotional. And they explained to me that she had just been freshly divorced and out of a bad situation where she was going to be left with the home. But for years she had been the homemaker, she hadn't worked. And the ex-husband was pretty negative about telling her, well, good luck, you're just going to lose the home because you can't pay for the home, and have fun, have a nice life. And so they came in with a broken scenario. She did not know her credit score, she had no income, and she had no assets. She was like, well, what am I going to do? And her goal, she just wanted to own the home that she lived in and continue to raise her kids in it. Well, we talked through her scenario. First things first, I said, do you have the ability to get a job? She says, yes, I'm looking. How much money do I need to make to be able to qualify for this balance of a mortgage? We went through her debts, we pulled her credit, went through her debts and said, okay, you gotta have this amount of income, right? And she said, okay. She left determined. And I said, come back and see me in about 6 months and let's see what we can do. Months go by, I'm working. She came in out of the blue and I thought, oh crap, I hope I gave good information. She came in and said, I'm ready. I've got a job, I'm making this amount of money, I know where my credit score is, let's see what we do. And we sat down and about 3 weeks later, we closed the refinance of putting that home just in her name, taking her ex-husband off. And that was one of the most emotional closings I've ever been a part of. Tears of joy, signing every document through. And so, and it wasn't a huge loan, but it was probably the most meaningful and impactful to me as a loan officer. It was awesome to see somebody go from what they determined a broken, stopped state to success, right? And all it took was Tyler saying, like Tyler said, getting in front of a professional, discussing your personal situation, and figuring out where your hope lies, because there is hope. There's hope everywhere, right? Even if it can't be today, it can be tomorrow. So,
Run out of time. What any follow-up questions to any of us, really? We really appreciate the chance to really come visit with you guys and hope that it's been of some value to you. So we've got
We have 2 more gift cards, real ones, to give away.
2 more real ones.
they are the
And we will shred your information.
Yes.
In the public garbage can. We'll just dump it out.
Sure.
Kelsey Walker. All right. Okay.
Stamos. Hey. All right.
Back row, back row.
Enjoy the rest of your day.
Appreciate it. Thanks,
Where's he at?